What's up, everybody? Chris Servashon here with SOAR, a Better Way CPA. Today, Facebook Live, we are going to talk about buckets got a hole. Now, what exactly does this mean? Well, I'll get into that in a second. But this week's Facebook Live, I'd like to encourage you, if you've got questions, comments, anything that you want to talk about as I'm going through this, please just ask away. I'm going to monitor those on Facebook as I go through this. Would love to answer you in real time if possible. But with that, buckets got a hole. Now, candidly, this title may be a bit of a stretch. However, when I was in college, I took what I'm still considering to be a useless literature class that I had to take to graduate in my spring semester, my senior year, and the title of the class was called Buckets Got a Hole. Now, I was an accounting major. I love accounting. That was my focus, and I could never figure out why I paid thousands and thousands of dollars to take this class called Buckets Got a Hole. Now, I still feel that way, and nothing has changed. But what I'm going to talk about, and this is where the stretch comes in, is today I'm going to talk about bucketizing the transactions that happen in your business. So we've got all sorts of transactions that can happen in your business. They could be invoices. They could be you running out to Office Depot to go purchase office supplies. Any of your vendors that are generating invoices. They could be expense report type items, all sorts of stuff, right? We've talked about this in prior videos. And, well, what do we do with it? Well, we have to bucketize it. Now, a lot of small business owners that I talk to, they talk about buckets. Now, a bucket really just means an account in your general ledger that either goes to the P&L, the profit and loss statement, which shows how much money you made, or your balance sheet. That's your statement of financial position. That's the kind of the health check of your business, so to speak. And so these accounts go to one or the other, and what we have to do is we have to take the activity that happens in your business and put them in one of those accounts. Now, what I'm going to talk about is the automation that we build around that and how do we do it. So very, very high level, two ways that we're going to get that data. It's going to come through a bank feed. So imagine that you're making purchases on a credit or a debit card. What we're going to do is we're going to hook up your bank feed. We're going to pull those transactions electronically, automatically, and then we're going to bucketize them from there. The other way that this could happen is OCR plus AI. Now, OCR stands for optical character recognition. And what that is where a machine basically takes an image. Let's just say it's an invoice, and reads that image. Now, if you take a picture of an invoice and send it in through our system, well, all the machine has is a picture, right? It's not like a readable PDF type format. Well, optical character recognition allows the machine, being the computer, to read that invoice in a picture form. So it looks at the pixels, it figures out, okay, this is from vendor XYZ, it's for these items, and then what do we do with it? Well, that's where the AI comes in. That's artificial intelligence. And essentially AI gets smarter as it kind of goes through these transactions and gets familiar with the transactions that happen in your business, be they recurring or otherwise. And so the marrying of those two technologies, OCR and AI, allows us to take vendor type invoices. So these are invoices from outside vendors. They're going to tend to be larger dollar wise. Think of maybe a vendor who is an IT support vendor for you, or I don't know. I mean, there's a wide range of vendor types, but they're going to be larger dollar types. They're not going to be things that you pay for with a credit card or a debit card or typically a bank draw or anything like that. These vendors are going to send you an invoice and then you're going to pay them at a later date, generally speaking. So marrying those two technologies allows us to take those type of transactions and then bucketize them in the general ledger. Now, what we do is my firm, SOAR, Strategic Operational Accounting Resources, we create proprietary rules-based classification column algorithms, really. And what we'll do is we'll take a standard listing that I maintain for my accounting firm, and we'll start by applying that to your firm or your business. So think about it this way. If you go to Starbucks, you being a business owner, you go to Starbucks to have like a client coffee, Well, that's going to get categorized as meals and entertainment. Now, if my other client goes to Starbucks and has a client coffee, also going to get classified as meals and entertainment. Those rules are going to be consistent across clients. They're very broad. They're never really going to be classified as anything else. Meals and entertainment type stuff is a really good example of that. When we think about vendor plus amount, that's where we're looking at different types of transactions that could happen from different vendors. Really good example. Say you go to the Shell gas station. Say you've got some sort of, say you've got a landscaping company. We can talk about Larry again if you'd like. Larry's Landscaping. That's the demo company that I've got. So say Larry goes to the Shell station. Well, Larry spends $40. Well, we know we've written a rule. Anything over $15, that's always going to get classified as either mileage expense or transportation expense, depending on how we have your chart of accounts set up, what you want to call it. But if that dollar amount from the Shell station is $3, meals and entertainment, and he probably went in and bought a Cliff Bar, or he went in and bought a Coke, whatever. Most likely did not go to the gas station to fill up his truck with all his lawn equipment and buy $3 worth of gas. Probably not. So those are the kind of rules that where we can kind of bifurcate the vendor and the amount and figure out how those should be and classify those based on those two categories. Last but not least, vendor plus item. So in the example of the OCR plus the AI, that's where the AI is actually able to read that invoice. And if there are different items that should get bucketed differently, think about an Amazon receipt. So you do your shopping for your business from Amazon. And say you went and you had to buy paper towels for your business, and on that same transaction, you also bought a computer, an expensive computer. Now, the OCR plus the AI would be able to read that invoice and say, all right, look, that computer needs to be classified as equipment, and the paper towels, that's office supplies. So we could write rules around the different types of items that you would purchase from a vendor like Amazon, Amazon being a very common one, and we can split that transaction into different buckets. And again, when we're bucketizing transactions, that's just another way of saying what accounts are we putting your business activity into, and then what financial statement are they going to roll into? Again, either a profit and loss statement, so what you make less what you spend, and then hopefully, relatively speaking, what you net out to is going to be the cash that comes into your business that goes to a cash flow statement. And then your balance sheet, it's your statement of financial position. A good example of that being that computer that you bought, that's equipment. It's going to go to your balance sheet. We're going to depreciate it over time. So you're going to recognize that expense over time as opposed to right when you spend it. That's a little bit down in the weeds, so I'll cut it short there. As always, please feel free to reach out. Email, phone, Facebook, LinkedIn, Twitter, carrier pigeon, all good ways to reach me. Maybe not as much the carrier pigeon, but you do you. That's it for this week. Next week, we're going to be back on the Thursday, 12:30 p.m. schedule. Really looking forward to it. Again, please feel free to reach out, and have a great rest of your day.